What is up, guys? Raymond here with another financial statement analysis video. This is going to be episode 6 in our series of German materials companies stocks. We did manage to skip a stock simply because it was only a duplicate of the last stock that we analyzed, which is Fuchs Petrolub. The stock that we skipped was just a preference share, just a preference version of the of Fuchs Petrolub. So it was called Fuchs Petrolub SE, which is just a preference share for people that are interested in preference shares of the company. So this is going to be episode 6 as opposed to that, because it's not because we won't be analyzing an entire different company if we analyze Fuchs Petrolub, the preference share version. So without further ado, if you're new to my financial statement analysis videos, what we do is quite indicative of the title. We analyze the top 3 financial statements of a company, those being the income statement, balance sheet, and the cash flow statements. And we look at the key features of each statement, and we try to determine the financial strength of the company at the current period of analysis, as well as the future prospects and future viability of the company. Without further ado, we're going to get into this video. As you can see, as you might have seen in a lot of the videos that I've done, I've invested small amounts of cash into each stock. There will be some stocks that I haven't invested any money into, but that will be a rare case. But in this case, I invested £1 and I received 73% return, which is good, I guess. Probably just because of unexpected earnings. But that will fluctuate over time. Without further ado, we're going to get to the key ratios. Starting off with the market cap of 3.9 billion euros, which is good. Minimum of 1 billion euros is what we look for. 3.21 billion euros revenue, which is good. We always look for a revenue figure, i.e. sales figure, that is lower than the market cap. Market cap being the price of the entire company, and it's all of its outstanding shares. The dividend yield is just under 1, which is quite small. So what we're expecting with a very low dividend yield, we're expecting high earnings and for the company to reinvest those earnings into the company, as well as a low debt to asset ratio. If the company has low net profit or low earnings, as well as a high debt to asset ratio, or even a moderate debt to asset ratio, it will be quite conclusive that the company isn't very good or very viable, simply because the dividend yield isn't very good. And we're looking for companies that either ultimately all of which earn a decent return on investment, or i.e. a decent profit margin each year consistently, with a little bit of growth or consistent earnings growth. But then variable, we look for increased dividend yields, and if not increased dividend yields, if it's a low dividend yield, we try to look for companies that manage to reinvest their capital quite well, but also manage to maintain a healthy level of cash to eliminate, or at least reduce liquidity risk and operation capital adequacy ratio risk. So without further ado, the revenue figure, as I said earlier, was 3.21 billion euros. The dividend yield was 0.98%. PE ratio is 10.9, which is really good. We look for a PE ratio of 10. Earnings per share is 1.87. And the beta level is 0.78, which is 78% of the market average, which is good. It shows the company is not overly volatile. The earnings per share, let's just quickly check the stock price. That is about 2%, just under 2%. Sorry, just under 10%. Earnings per share for the 2021 financial year. The stock didn't move much in price today, but that's not an issue. It's more so based on the viability of the company, based on its financial statements and its financial health. But we're going to get into the next part, which is the income statement, the first of the 3 financial statements. We're going to check the consistency, the growth, as well as the overall profit of the company. So as you can see, there's a massive inconsistency here. The revenue figure seems to be more consistent than the profit margin figure. It seems to have been at a certain level in 2019 financial year, and it managed to decrease a little bit in the 2020 financial year, and managed to increase quite significantly in the 2021 financial year. We're coming in 2022-2023 financial year. So all of these are past financial statements. We haven't got one for the current financial year yet. But with regards to the profit margin figures, it's been extremely volatile and extremely unreliable. It was very, very low with regards to the 2019 financial year. 2020, it was negative by a massive amount, almost 100% negative profit. And also the 2021 financial year, the company managed to make almost 90%, or maybe even 90+% profit margin, which is quite strange because I don't know how it managed to do that. But anyway, we're going to get into the balance sheet to see how the company manages assets and how much debt is taken on. Hopefully it's not too high. So as you can see here in the 2019 financial year, its total assets was quite very high, almost 11 billion euros, and its assets its assets were almost 11 billion euros. Its liabilities were over 50%, so about 65%, which is quite high, but it's not necessarily massively high. 70% and above is quite high, I believe. 2019 financial year, it was even the total assets seem to have been reduced, I guess maybe through depreciation of capital. And the the profit margin figure, not profit, sorry, I'm losing myself here. The liabilities figure was even closer to 100% in this year, the 2020 financial year, which is becoming more dangerous. So I'm guessing the stock price probably fell quite significantly. And the 2021 financial year, which was the last financial year, the company managed to offload a lot of its liabilities. I'm guessing the cash flow statement probably reflected this, that it used a lot of cash. So when we're looking at the cash flow statement, I'm expecting to see with regards to the 2021 financial year that the company had a negative net change in cash by quite a significant amount, simply because they probably paid off a lot of their liabilities. But the asset value is still very high. I think it increased actually. So they probably spent a little bit of cash, maybe about 10 million or something, or maybe 10 to 100 million euros on capital plant and equipment, but also spent the bulk of its net income on the and operating cash flows on property, plant and equipment. So I'm definitely expecting a negative figure in the cash flow statement for the 2021 financial year with regards to the cash flow from investing activities. And also a negative figure with regards to the cash flow from financing activities. We're going to see a low cash flow, a low cash outflow for dividends. So that's not going to be taking up a large part of the financing cash flow part of the cash flow statement. So without further ado, we're going to go to the cash flow statement just to see whether or not we're correct with our predictions. So the 2019 financial year, the company managed to, we're going to do it in the proper way. We're going to start off with the net income, which is starting line of the cash flow statement, 2.42 billion euros for 2021. And then we're going to go into cash flow from operating activities, 326 million. And investment activities 2.10, which is actually quite strange because we usually see a negative figure in this aspect of the cash flow statement. With this aspect of the cash flow statement. So capital expenditures was negative 358 million. So it spent 358 million on capital expenditures, so increasing property, plant and equipment. Investing cash flows, so whatever it invested in, it managed to gain 2.46 billion euros, which is really good. Cash flow from financing activities, it lost 2.25 billion, like I said, paying off debt. And the dividends paid, it didn't pay any dividends, which is good, I guess. I don't think it was in the right position to do so anyway, which might not necessarily rub off good on investors. But then again, the company definitely made itself look good by retiring a lot of its debt. The foreign exchange effect was very minimal, 13.3 billion euros, and net change in cash was 185 million euros. So we were wrong. I was wrong, sorry, in terms of the net change in cash. I thought it would be a massively negative figure, but we were wrong. But it did manage to. We were right in terms of the net change in cash. Sorry, the issuance of debt. We were right in that regard because a large part of the financing activities is. The cash flow from financing activities is negative simply because the company managed to retire a lot of its debt. Well, let's look at the 2020 financial year and 2019 financial year to see if we're right in terms of everything else. Net income, like I said, it lost almost 2 billion euros, which is really not good. The company lost almost half a billion on with regards to investment activities and financing activity. It lost 79 billion, so it paid out a small dividend and it managed to get rid of 72 million euros worth of debt, and the net change in cash was negative 118 million. 2019 financial year, the company made through 224 million euros. Cash flow from operating activities 639 million, which is really good. Investment activities lost for 500 million by buying capital plant and equipment. Let's just see if we can kind of okay, we're going to look back at the balance sheet just to see how that's affected the total liabilities. I think that is what has caused let's just quickly check that, actually, the balance sheet. So that's very strange because they spent a lot of money on capital plant and equipment, but it doesn't seem to have increased. It's actually decreased, which is quite strange. Anyway, we're going to get back into the 2019 financial year. Investment activities 500 million euros negative. Capital expenditures is spent 505 million, and it gained 11 million. So the financing activities didn't take up a bulk of the cash flow statement. That was quite insignificant. So net change of cash for the 2019 financial year was 154 million. I hope you guys have gained some insight into reading financial statements and understanding more so how they work and the different aspects of them, and how to analyze financial statements and how the financial statements represent the company to shareholders and its existing shareholders and to prospective shareholders, and how a company can manage to portray itself in an attractive light and how it cannot. Without further ado, I'm going to close this video. Thank you guys for watching. I will see you in the next one. Peace.